What's up? What's up? Hope everybody's doing well. Today is February 7th, 2023. Real quick before I start, I'm back. I'm black. And happy Black History Month, y'all. February is a time where, I like to take some time and just think about all the things that have changed here in the US and the luxuries, I guess you can say, and the things that we've been able to come from as a group of African Americans here, and I'm definitely thankful. So, just want to just say hello and wishing everybody a happy February when it comes to Black History Month. If you celebrate it, great. If not, don't worry about it. But it's just a time to just remember and be appreciative. So, with that being said, I really want to get into discussing a couple of things here that'll help us understand the mentality that we need when it comes to stewarding these dollars that we earn and therefore transferring them into an investment such as crypto. And to kind of see how are you guys conceptualizing where we at now? The tides are starting to shift a little bit, and so can you understand what that looks like and what are the strings that pull these things and help us to see, okay, well, this is what this process is going to be like moving forward, and we could see it happening real time. So we're not going to look at I'm not giving any opinions today, guys. I'm going to just give all real time things that we're seeing and how to be able to tell, okay, this is how potentially you could position yourself, right? So I appreciate y'all for coming through. Let me see if I have anybody in the chat. Okay, JE, what's up, my guy? He's in the chat. Nice to see you. Got my guy, Navin. What's up? Appreciate you for coming through. Stefan, let's go. And yes, I am back live. And I'm happy to be here, guys. Like, this is something that in recent time I haven't had as much time to do, but I'm trying to continue to create the time to be here for not just myself as I look at this stuff, but present it to you guys in a clear, easy to understand way. That way, there's no fear, or I can reduce the stress and fear levels when we look at markets. And it's nothing to fear; it's something to understand. And so, I just want to be able to be the PA system, the filter system for us to just get a good, sound mind when it comes to looking at this stuff. There's no greed, there's no fear. It's just a understanding of, hey, this is how things work. And so here's where I can get in. Here's where I fit in with all this stuff. And so, with that being said, I'm gonna show you guys a lot of good stuff today. I took some time to prepare this for y'all. So, without further ado, let's get into it. Let me see if I can address the chat. Who else we got? Let's go. We got Art. What's going on? Appreciate you for coming through. All right. So, real quick, I want to talk about. We'll start here. First principles for people on the replay checking this out after the live is the biggest thing that we all need to understand. I'm going to continue to beat the dead horse is the dollar that we are saving, the unit of account, the purchasing power of that dollar is going to continue to decrease day after day, year after year after year. So you're doing yourself a huge disservice. That's why you're feeling like you're having to work even harder, more hours, and yet you don't have anything to show for it. That's the way that the system is meant to be, is to basically secrete all of the working hours of all the people who are getting a wage, and then essentially just devaluing that dollar. So that money that they earn, it's just not worth as much. And so that's why you need more of that unit, so more of that dollar to pay for the exact same things, right? So eggs is a big topic. Eggs are, I don't know how much right now, but 10 years ago, eggs were a lot cheaper. And then so we're going to continue on this trend of the dollar, the thing that everyone wants to save, it's going to continue to just become valueless. And this is what inflating is. This is inflating of the currency. And so without this understanding, it's going to put a lot of people in tough positions continuing on the future, because they need to trade that dollar for something that could sustain itself and then grow through time. Here, cryptocurrency is one of the best vehicles to do that. So first principles real quick before I get started. Now I want to talk about the rotation of money. And so we're going to use the stock market to understand, okay, well, where does the capital go when they're going risk off? Basically saying, hey, we don't know what the future is going to look like with the interest rate, and we want to protect ourselves. So large players, they like to do a certain thing. And then when they say, okay, risk is starting to get a little bit smaller, then they start to transition into something else called risk on. And so there's a rotation ratio that I'm going to show you guys to help us track and see how that's going. Also, I want to talk about the MACD. So all the chartists and all the people that are showing charts and all this stuff, I don't know if people ever really get to explain, well, what does it mean? So the MACD, the moving average convergence divergence. And so this helps us understand market flow and being able to see, okay, the rotation of being more bullish or being more bearish, and the selling pressure and the buying pressure and that rotation. So we're going to spend a lot of time diving into some of those details, which I don't want to be too long, but sometimes for us to really understand how these things work, we got to spend some time. So grab your pen, grab your paper, take some notes, and let's get into this. All right. So my guy Steven in the chat, appreciate you for coming through, man. And we had a great convo earlier this week. It got me inspired to continuing to keep the pressure on. This is not a time to waver or fade. God didn't make us to have fear or to get worried. We're here to push through, and that's what we're gonna do here today. All right. So let's get into it. Let me share my screen and we'll get going. So let's pull up TradingView and we're gonna look at Bitcoin on a longer time scale. And so I'm gonna continue to beat this dead horse. The reason why, hold up, y'all, let me put this on the big screen. That way we can see that. All right, cool, we're good now. So the reason why I'm gonna continue to encourage people to think not on a daily or a weekly time scale. Think on a monthly, a quarterly, and a yearly time scale. When you do that, you're going to increase your chances of success when it comes to investing tenfold. The issue is people don't start off with that good core foundation. Then they get tricked into just trading on the daily or the weekly. Swing this, swing that for majority of the money that they're putting into a market. And this is riddled with mistake after mistake, listening to the wrong people that ultimately just get your money taken and you're a casualty to the market. And then so I don't want that mistake to be had for anyone new or people that are continuing this journey. Learn how to expand your horizon. Think long term. Long term players are the people that win. Flat out, it's been proven for years. I mean, just look at this chart right here. If you've been a long term player since the beginning for Bitcoin, you're doing just fine. You haven't sweated about money in a long time if you just got something good and you held on to it for a long time. And so this is the key core fundamental understanding, right? And I like to do this every single time I show this overall chart for Bitcoin. But I mean, just 2015, we're talking about 8 years ago. 8 years is not that long as an investment, right? If you're new, you may think, oh man, I don't know what could happen during that time. But what you know is the one core foundation is that the dollar is going to continue to devalue. So anything denominated in that dollar, guess what? It's going to go up in value. So they work inversely. And then so this is the key understanding that we have here, and then we're going to continue to beat this dead horse. So for example, it doesn't matter. You don't have to get the bear market lows, but even if you just held Bitcoin from years ago, right, you're still up 4,357% as of today's price. At the top, right, you would still be up over 100x from your initial cost basis. And the key is to not necessarily try to pinpoint one time period, is to accumulate when the value is there, when there is low risk. And then essentially when no one else is here and they don't want the asset, that's when you go get it, right? So you have to change your thinking. And this is the concept of why I want to talk about this so much, about understanding the rotation and being able to conceptualize it. Because until you can conceptualize it, you won't take action. And the thing is, you can't change your situation if you don't take action. And so let's kind of dive into this thing here. So as we come in today, and let's get this on the big screen so we can see what's up. So we can see that Bitcoin is continuing to prove itself. 14 years of outpacing the dollar considerably, right? Now, I want to talk about this thing down here called the MACD. I know that we've seen it. I've been using it for a good amount of time, but I don't think I've ever had a chance to fully explain how to use it and how to understand it and how we can tell the rotation of money with this thing here. Because people get exhausted. People get exhausted from selling, and then at the same time, when prices go up, now people are like, oh, "Okay, I got to do something here." And so you see a translation of prices going high to coming low. So there's no straight lines here, and that's the beauty about a market. So no one can predict what can happen today or tomorrow, but you can see trend through time, and time is a key factor. And I've done plenty streams on explaining why time is the most important thing when it comes to investing. But with that being said, with this MACD, we can see the rotation with the moving averages, but also these bars here to explain the story for us. So what I want to do here, I want to put that on the big screen, and we're going to see how that lines up, right? And so here's just MACD. So a couple things. You have the moving averages here. So you have a 26 and a 9 EMA. And so we have certain things now when they cross, that tells us something. And then when they cross down here. But the biggest thing that we can see is, hey, we have green. That means positivity. That means money is inflowing into the market. When you see that start to subside, and now we go to light green, ding, 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 and you see it start to go and trend down, that means money is moving out of a market. Then we go to red. That means money is continuing to flow out of the market. And then selling pressure subsides. And then now we're still negative, but now we see money coming back into the market incrementally. And then we flip back to green. And then so we could see this cycle after cycle after cycle. That is the last cycle. I mean, so we got to zoom in because there's a little bit less money in the market. So you got to be able to zoom in and check out this cycle. Same thing, 2017, green, 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 green. Hey, market is rotating to start to more so pull profits out instead of adding to the market here in January 2018. Then you see the rotation, right? And then you see the rotation back going into a new market, right? And then so that's what this previous cycle was. So one thing I want to do is to look at the pivot points, and then we're going to look at price and see how can we use this MACD to help us understand the rotation of money in correlation to what the price is doing, okay? So with that being said, I'm going to go ahead and I'm going to place right here. So key things is I'm going to place, because we're in the bear market. So this is what we want to focus on, these red periods. I want to place every time that we have a light red bar and then another portion when we go to positivity overall with the market. So we're at a net positive, and now we start to uptrend. So we're going to put a yellow vertical line there, and then when we finally hit green there. So we're going to use, and we're going to go back. We're going to not just, cherry pick. We're going to go through the entire, amount of data that we have for this stuff, right? So we got to go ahead and pull that up. Now, same thing here, right? We're going to choose light red, boom. And all we got to do is look at it when we're done. And it takes months, right? So each bar is a month. So this stuff doesn't happen overnight, but you can kind of see over the months, it takes sentiment some time to come back to where we're, full on bull mode, right? And then these are the bull markets that everyone loves, but typically they don't hear about till way up here. And then they have maybe not so favorable experience because they don't have this understanding. So being down here, paying attention at these lows, this is what helps you build a portfolio, accumulating through these months and being able to feel good about your investment through the years because you're going to have a great experience. And so now we've got this cycle there. We've got that cycle there. This is the COVID low. So we can even take, this portion here. Same thing. We got very bearish, right, with COVID. And then so that's a black swan. Then we start to subside and then we go back up, right? And then so these are the ebbs and flows of the market. So now let's go ahead and shorten that down and see, okay, well, what does the price do during these times? And how could we use that to our advantage? One more, we got one more right here. And then so we're still waiting to go green, but as you can see, right, as you can see, that sell pressure, which is new buy pressure, starts to subside. And then we, at some point, will begin to go net positive, and the market likes to start a bull mode. And so one thing that we could easily define and understand is that, okay, so let's kind of get some color coordination between them. So we'll change these green ones. So like, I guess to say technical start to bull markets, but you want to be in before things get really, really bullish because that's how you get the best returns per se, right? And so, and this is just what the data is showing us. It's not my opinion. This is just what we're seeing, okay? And so the next thing here, right, boom, let's go ahead and change that. Let me see, where am I at? Let's change this to green here. We'll change this one to green here. And we got a new green one coming at some point in the future. Some point, we don't know, but coming at some point in the future. and we'll go down and start to discuss these moving averages as well, but we'll do that on the weekly chart. But we got another green one, beginning of a bear market, I mean a bull market coming up here in the future, but we are in that lower basin, and now things are going to get ready to rock and roll. So are you able to conceptualize it by looking at data and understanding? So yellow, let's check it out. Yellow vertical line. What do we see? Here, here, and here, right? These corresponds to extreme lows, right? Now, is it the exact low? Maybe not the exact low back in 2015. It was $142, right? And here we're at $237. But this bottom basin, because we're not trying to capture the exact low, we want to say, okay, the market is starting to tell us something different. And now, even though price isn't rocking up like crazy, the selling pressure has subsided. Now we go sideways. We accumulate all this good stuff right here. And then now we see the gradient, right? We see the gradient start to shift from being sideways, primarily, from being sideways to now the gradient really is starting to shift. So we hit this green line. Now we're positive, net positive, and you see go from sideways to a more angular upwards momentum. So people who understood what we're looking at right now, understood this process, and you accumulate through the months. Don't try to pick just one time period at a top or a bottom or somewhere in the middle. Continue to dollar cost average, but really crank it up, right? It makes more sense to crank it up when the risk is low. And so, with that being said, the data is showing that this is the more advantageous time to do so when you're entering into markets, or even if you're stewarding capital during markets. Don't be afraid to allocate funds into something that you know is going to be here for the long haul. Which Bitcoin has proven itself, and other cryptos are also they have that case that they are building for themselves as well. But so for people who understood this bottom basin, so the next, let's see here, let's see the next, let's say you didn't even get it at the exact moment, right? Let's say you still waited a couple months to confirm, that's fine. But people who accumulated, right? And then, like I said, right, when we go to the bottom and we say, okay, we go from dark green to light green, what does that tell you? Sentiment change. It tells you money rotation change. Large players are starting to take profits. You should probably be doing the same. And so you don't have to worry about having to trade all these ranges. Get the macro view. It's less work, right? You don't have to worry about trading this swing and that high and all this stuff. Understand what's going on the larger scale, and then it's a lot easier on your mind to be able to capture the gains that you're looking for. And then, so let's say you don't even get the exact top, but anywhere during that time, you had a positive experience and you're able to get anywhere from, could have took profits at a 3x, a 5x, a 10x, 30x, a 44x. So when I say X, that's multiple on your money. So for example, you put in $1,000, that turns into $40,000, $44,000, all the way to the tip top, which we're not saying you're gonna get. But even if you wait a couple months afterwards, right, that's fine. And okay, you start to see, okay, we've rotated. Now we're starting to come back down. These moving averages are starting to arc down as well. Okay, now let me take majority of my profit. And that's still fine. You're still up 35x. So it's entry point is helpful to be able to be doing something down here. Now, even if you bought over here, it's okay as long as you let time pass by. But if you look at this time period, we're looking at 976 days, give or take, anywhere in between, 800 to 900 days. And what does that tell us? That's almost about 3 years, right? Give or take 2.5 to 3 years for you to do well with an investment. So do you have what it takes to just wait? That's all it is, right? So there's one example there. Let's continue on, right? Yellow line is in correlation with bear market lows. Is it the exact low? No, but we're at the bottom basin. And so, but the bottom basin is all of this good stuff down here. So what does that mean? That means price in between 5,000 and 3,000. And so don't worry about volatility per se. You have to let your mind go of, oh, my portfolio went from this amount to that amount. Understand this is a process driven thing here. And life is all about process. If you can't understand the process, you will make mistakes. You won't take action when you should be, and you'll be taking action when you shouldn't be, right? So we're all here about trying to understand process. So bear market low, we see the flip from dark red to light red. Okay, start to accumulate, and then this is letting us know, okay, we're in positive. We're starting in bull market positivity. Now, yes, did we trend sideways for some time, right? And that happens. And then so we had another chance here by going slightly negative again with COVID. And then so even at this $6,000 range, you're still before the majority of people before the bull market, right? So a lot of this stuff is ticky tack, trying to get every pump and trying to get every drawdown. Sometimes that's a lot to rack your brain around. But if you can stay consistent about understanding the big macro lows, what happens is you are safe. This gives you're more risk averse when you take action when the most people don't want to. Your safety net is a lot better because you're getting basement prices. Basement prices in terms of what you're accumulating. And then so yeah, it may go up, but then again, when we potentially may come back down, there's too many people who have that cost level, that cost basis lower that they won't be willing to sell because their cost base because they're not at a negative, so they have no need to sell. So the large institutional players understand this, hence why they're able to accumulate down here, and then they don't get scared down here. They accumulate more if we do have a time period where we do maybe trend down a little bit, but for the most part, look at the gradient. It's not necessarily just down like a bear market is, right? What does that look like, right? So we look at this gradient, bear market for months on end. And in this situation, we really just went up at a really accelerated pace, quicker than probably we should have. And then so the market has to digest that before we can move higher. But the whole ethos of what I'm saying here is understanding rotation is a huge thing. Okay. And so mainly understanding these major after bear markets, right? Bear market, understand this rotation of where we've really been since October. And then, I've been pounding the table for a long time, months and months, not saying, hey, you guys have to be buying everything that you see, but starting to get exposure when things are on extreme discounts is how you do it. This is the process. And so, with that being said, after the sideways, right? So, after sideways, right? Because this is sideways action, you have the gradient of upwards. And then you have distribution. And then what happens? Then you go down. So, those are the only ways that you can go in an asset. A chart, it'll go sideways, up, or down. And then so you want to be able to capture all of the upwards. And so being able to capture all of the upwards, you have to be in before the upwards during the sideways. And so this is where we are now, really since June of 2022. Because what we're finding is once we break this basin down here, we can start that upwards trend whenever that may be. And so that is how we're going to continue to use the MACD. And same thing, people that understood this last cycle, right? Let's say you didn't get the exact bear market bottom, but you start to see this sell pressure, this rotation of money starts to subside, and then we go positive, right? Then let's say you got it a couple months late. That's all good, fine and dandy. Immediately, you were up 200%. But then you had sell pressure protection because you accumulated at the right time. And then it went up to, a year later, you're only up 50%. But if you compare that to the legacy market, you compare that to stocks, being up 50% a year later is an amazing return still. But that's just the beginning of the story because then the bull market comes, right? We see this really start to uptick on the positive side, and you see this ladder of this green candle on the monthly scale. And that's why we're looking at the monthly scale. This is how we can really conceptualize it. And then boom, you had an opportunity for 12x, 10x, 5x, wherever you want to take profits is up to you. But you really want to try to capture a good portion of that by understanding this metric. Okay. And so same thing here, guys. Now, was this the exact low? No. We had FTX the month after, which was, I would say, that big capitulation that we need, that big flush out. So now new people could come in and accumulate this asset. So what I'm going to do, I'm going to put this on the weekly to really explain this part. Now, let's take a look at these moving averages and how they also tell us a story. So they also tell us a story of when we're in a bull run and we're in a bear run. So here is like net neutrality, like that 0 point that, let's see here, let's get a horizontal line. Here's when we are at 0, right? So let's get this as close to 0 as possible. Let's see if we can change the color on that. Let's change that to white. So easy to understand. We can take this back all the way as far as we want to go. So that's what we'll do. Taking time today, really, really explaining uh, how to understand this, so that way y'all can come in and take a look for yourselves. Don't just use my word. But what you see is, so bear market is when we were below this net zero line. Bull market is once we go positive. And what do you know? You can see these moving averages here. Let me zoom in a little bit more so we can see this one here. So what do you know? This coincides with the bars, right, on the monthly chart, is when we finally go from bear market lows, and then you start to see this basin, and then so we stop going down. Now we start to curve up, right? And then so this is that nice accumulation window in between, like here, just right here in this curve, which is typically, 6 months, 8 months, a year. And then once we cross bullish, we don't come back. And then now we're just bullish. There's bull run. Okay. So I know this is like convoluted, but we're just looking at that. So we're looking at this portion right here. Okay. So now we go to the next. And same thing. You have your bull run, you have the rotation, money coming out. So now we're looking at these moving averages. Now you start to see this severely turn downwards. So that's then, party is over. Party is over. Probably should be taking profits. And so now we rotate, and then you see this party over. Now we rotate into bearish sentiment. Same thing here. Now we get this basin, we curl over, and say same thing. It coincides with this, hey, end of bear market type scenario. And then we start to curl over. And then once we hit here on the weekly, we go past the net zero line, bull market begins. Now we had a little bit of a double dip. So this was just an extra opportunity if you missed it the first time. We may not get the extra opportunity that COVID gave us, right, this next cycle. But same thing. When you start to see this curl up, it's on and popping, right? And so same thing here with COVID. Opportunity went a little bearish, but then we curl up, and then at this moment here, and we start bull run. And then so same thing here. Let's get that in frame. So we see bull run, and this is how you know that this second top didn't have legs, is because all the money came in, and you see it come in very expansively. We didn't make a new high with this metric, and it subsided. So we did have, some good pricing, and we came back up to about 68, 69K, but we couldn't push through because we didn't have enough capital. We didn't have enough momentum because all the large players in momentum was taken out at this first high in 2021 of March. But same thing here. You go bearish, and then once you go bullish, it's on and popping. And so when you see a big dispersion away from this zero line, lets you know what the deal is. Same thing here. We're bearish, and what do you know? We're starting to curl over, and we're attacking, and we'll see how quickly we get there. It may be here. It may be all the way out here in late September. Who knows? We may have another opportunity like another COVID where we go negative for a little bit. But when we get back above this zero line, say it one more time, it's on and popping. The train is leaving. And so the good time to be accumulating, get the asset from understanding how the money rotation moves and conceptualizing it. So when we go here, we'll see what happens from there. I'm not going to project out, but we'll just see. All the data is showing us what typically happens. And so, yeah, this is rotation by using the MACD. So I'm hoping that's helpful. Real quick, that was a lot. So let's take a break, see what y'all think, if y'all have any comments, and we'll go from there. And I'm hoping that y'all can use this tool in your arsenal here in the future. So let's see what y'all got. What y'all think about that? Do you see a big capitulation happening when the Fed stops rate hikes? So my thing is, I'm not going to worry about any major capitulation in the future, because the biggest thing is like when there's market liquidity that gets injected at a severe discounted price, what we're going to find is, yeah, because between now and when they stop raising the interest rates, if anything, that's going to give people the green light to say, hey, you know what? There's a little bit more understanding of what they're going to do. And then where the worry would be if when they start to cut, and the reason why the Fed starts to cut, because there's some type of economical problem. And then so maybe on the back half of the year, people are going to be like, okay, this is going to be a little bit bearish. something's going on wrong with the economy, and then they're gonna have that, that downwards trend, and then they come back with the stimulus, and then we can go back up. So with that being said, I'm not really too worried about that, is because it may just give another opportunity like COVID did. But in general, when we're here at this period where we're at today, and where we've been for the past 3-4 months, give or take, when you get in at this price level, you have downside risk adjustment to where you're not going to be really too worried. It's like, realized profits or unrealized profits may come down, but you're still in profit, and that's the whole key about investing. You want to be in profit for a long period of time, and so that's by taking action when it's being called to do so. And so that was a long answer to say I'm not worried about a capitulation in the future because I'm doing what I need to do right now. Okay, let's see here. Will the raising of the debt ceiling hurt crypto the way it did stock market in 2011, for example? So that's perfectly fine. We can go take a look at that. So I'll keep that in the notes. Hold on, write that down. So we'll go look at the stock market in 2011 and see, because I don't want to share an opinion. I just want to show you what happened and see how the money rotation was during that time, since that's the topic of conversation. Okay, so my brother, what's the deal with the saying it's priced in already? Meaning, if the rates are priced in, why do we still have the swings? So when you hear it's priced in, essentially that's talking heads way of saying their opinion, of saying, hey, markets are forward looking. But the thing is, markets cannot predict everything 100%, right? Because the stock market tries to look at the sentiment of what people are saying now and try to predict what they may do in the future. So they say, hey, this is priced in, that's priced in. I don't like using that term as much because there's always something that's unpredictable. Life is so unpredictable that not everything is always priced in. Now, their reaction can be at that moment in time when they hear something that may not sound great for economic conditions. And that's why we see these swings every time the Federal Reserve talks. So Jay Powell, he goes and says something. Every time that we see something in the news that may be like, oh, China's doing this or something crazy, markets try to adjust for some type of risk that they may find happening in the near future or in the midterm future. And so that's what priced in means. Typically, when we're here at the point of where we're at in bear market lows, risk is just so low. That's what we need to be focusing on. We need to stop getting, I'm not saying you're doing this, but spend time focusing on how the market handles itself. And if you understand these key core principles, all of the talking points and all this stuff, the debt ceiling, all this stuff goes to the wayside, because at the end of the day, um, you're putting yourself in great position. And that's what it's all about, being in great position for the long haul. There's going to be some short term and midterm stuff that may happen, but for the long term, you're going to be put in the best position for the long term by paying attention to what we're talking about and taking action. And that's all up to you. I can't tell you what to do. No one can tell you what to do. But taking action when action should be being taken, right? At low risk points. And so that's kind of what I'll say about that. And cool. So we got a good breakdown of the MACD. Good. I'm glad that y'all have that. So it's just crazy how a little thing Jay Powell says and how the market swing because of one specific word he says. And you're 100% right. But what you'll find is this is all short-term stuff. And so what I'm trying to help us frame is to never be reactionary off of the words of a man, because he may be saying some stuff to pump fake people, but at the same time, people can also see through him. But all of these little gyrations are all just short-term stuff within 10 to 2 weeks. It doesn't tell us the story of money rotation, how I'm talking about, on the larger scale, month to month, year to year. And then that's how you really, really make it. And so when we focus on the long-term scale, we could really do ourselves a good justice about being able to capture what we're supposed to capture when things get really bullish, because we did what we need to do when things are on an impressive discount, and we don't get swayed or we don't get like jaded off of a couple words or what people are saying online on Twitter or on the news. All that stuff is meant to get your attention away from what's really happening. And so the biggest thing is we got to understand what's happening with the dollar, the devaluation of that. And then when the large players start to change from risk off to risk on. So that's the next topic. We're going to go into that, and then I'll go back and we'll check 2011 and see how did the stock market react. But that's where we're going right now, and let's continue on. So let's talk about rotation. And then so we know we have to extrapolate. So let's get a lot of the stuff off of here before I start explaining what this is. So we need to extrapolate crypto because we know crypto is just a smaller market of the stock market. Stock market is a smaller market of the total currency market. And then so when people say, hey, I want to get a better return than my dollar, they put it in the stocks. And then when people are saying, hey, my stocks, I make money in my stocks, then larger players will start to funnel that into crypto. And so we see that rotation. So real quick, let me go ahead and explain what this is and what we're looking at here. And let's do this some justice. So what I have here, this is XLP versus SPY. Wait, let me make sure. Is this the right one I want to show y'all? One sec. No, I'll show you guys this one. This is the one I want to show you. Okay. So let's get all this mumbo jumbo. So we're done with the MACD. Maybe we'll go over RSI on another day. So we have this. So this is the SPHB versus the SPY. So the SPY, this is the ETF for the SP 500. And the SPHB, this is the ETF for consumer staples, aka the defensive sector. And so let me explain. This is a rotation. So this is oscillating. What do you see? Up, down, up, down, up, down. And we're going back actually to 2011. So this will apply to the question that we had. So understand what institutions do. When economic times may be a little bit hard to understand, right? You know what? No, I have this mixed up. No, this is, I'm so sorry, y'all. This is, let me make sure I'm showing you guys the right thing. Yeah. Okay. So what we're looking at, this is going to tell us risk on or risk off. I'm sorry. And then so these are the high beta stocks. I'm sorry. So we're good here. Take back the last 60 seconds. High beta stocks versus the SP 500. And then I'm going to show you the inverse of when they go to the defensive side. So risk on versus risk off. So risk on, highlighted by the upwards trend with the green line. Risk on, risk on, risk on, risk off. And then so risk off, basically. So we'll turn that to red. So we'll turn all these to red. Risk off, risk off, risk off for some time, right? Risk off. So we can clearly kind of see these rotations, right? And so where are we going? We were risk off for some time. We broke out, now risk back on. And so what this tells us is when larger players are saying, okay, we're not quite ready to start putting money into these high beta tech stocks because we're still unsure about what the future may be looking like in the mid to long term. And so what do you see? Consolidation coming down and them going into the defensive sector versus the high beta tech stocks. And then when they do go into the high beta, and so what we can see, we really want to highlight these times when we see, okay, large money flowing into the high beta. So we're going to look at that, and this is going to be the yellow box of that time period of what that looks like. So this is from February 6 of 2016 to December 2016. And then we're going to look at April of 2020, right? So March of 2020, we all know that COVID, into March of 2021. And then so this also is going to tell us when this train ends, that's it, right? And so we didn't continue to go higher. That's why that November 2021 was a false top, right? This is not what large players were doing. They were taking profit and going back into less risky stuff. And then so what we're going to do, we're going to pop on and we're going to look and see if we can bring Bitcoin into the fold and see what happened with Bitcoin during this time. So we'll put this on the log scale. So log scale, boom. So what do we notice? When this is going up, Bitcoin is having a good jolly time. These are the beginnings of the bull market. So we have this sideways period of where people are trying to figure out, hey, what's going on, right? And then you start to see the rotation. So we go up some, but you start to see it really get kicked up when so Bitcoin's going up. This really gets things going and gets kicked up, right? When they say, okay, we're going to go more risk on, go into high beta tech stocks, and then Bitcoin starts to fly. Same thing here. Back in March of 2020, we see them start to really severely allocate. And so you see this major upswing, this green counter right there, which is huge. Let's zoom in there. So you see this uptrend where they say, hey, we really need to go risk on. And what do you see? The same thing happening with Bitcoin. And then it's very interesting because you see this going sideways. Guess what? Bitcoin's price went sideways. And then so now what do you see? Boom. This is going up. Bitcoin trends up as well. And so this is a ratio. So what I've done here is I've taken the ratio of money moving from the S&P 500 to the high beta tech stocks. Okay. And so what this ratio tells us is when we break out of downtrends, we like to go more risk on for a good period of time. How long? We don't know. But same thing here. So let's move Bitcoin out the way for a second. When we break the downtrend, just like how, for example, so let's get a solid downtrend here. When we break downtrend, that means good times ahead in terms of market going from risk off to risk on. Now, it may not happen because this is a weekly chart. It may not happen overnight, but through the months and through the year, this is, what's typically happening within markets. So this is the rotation, okay? And so we can see that. And then so we got a big old triangle here of us getting some support here, support, breakout, money going into the high beta tech stocks. And then same thing here. I liked it because you can use a Fibonacci retracement even on ratios at certain times, right? And this is a time where it's applicable. And then so same thing here, right? And this is in the future. It may take some time. We may kind of shuffle around for a little bit, but at some point in time in the future, 2024, 2025, when you see risk on, it really goes risk on, and we'll see this metric start to trend up higher somewhere between this 1.6 and this 2.6. Okay. So this is talking about shifting of the tide, money going defensive, offensive. Offense means gains, and that's what we've experienced with Bitcoin. Because right, let's take a look and get an in close look. So you see this when they say it's time to go, we're gonna go offensive. What do you know? Bitcoin is a part of that journey as well, and we've seen price from Bitcoin go to 15,500 to almost $24,000. So that's just what it is. And this is the rotation of money. Now, let me go back because this is what I was going to show you guys conversely. So this is the exact opposite. Okay. So this is when money is coming out of defensive stocks. So XLP, this is the defensive sector, and then going into the S&P. So this is basically saying this. When this is going down, that means this money is going out of defense and going into the stock market. Okay. And this is the overall stock market, the S&P 500. And so the key thing is we want to take a couple things. And I have this moving average. So this is the 200-week moving average. And this is a key thing because when we eclipse this 200-week moving average, how we've done here, and we've just done it, this is going to tell us an amazing story as well. And so one thing that I want to kind of outline for us is when things aren't so great, where people are like, look, we need to go on the defense. What do? They put more money into defensive sector versus the regular S&P. And then so what do you see? A major uptrend going into defense. And then so we could see this. So this is taking a lot of data. And so what we'll do is we'll pull up the S&P 500 and say, well, what did the S&P 500 do during this time? So I have that prepped right here. Let's take a look. So the S&P 500, what did it do when they go defense? So large players are going defense. That lets us know market's going down. And so this is the financial crisis of 2009. Same thing here in 2001. They go defense at a high rate. Guess what? Market's coming down. And when they stop, when the defense and they say, okay, we need to go ahead and go offensive now, lows, and we start to go back on the offense, going back, the rotation goes back into the SPY, and then SPY goes into the high beta tech stocks. So you kind of see the rotation, right? And then markets go back up. Same thing. Defense, go back up when the defense is done. Okay. And so the biggest thing is now. So let's see if we could put this in plain so we could see it. Okay. So the biggest thing is now when we eclipse, right? So when we eclipse this portion here, this 200 week, this is a good sign. This is meaning that, hey, a potential for sustained, okay, let's go here. So potential for sustained money funneling out of defense. So I guess we'll make those green. And going into the S&P is, likely, right? It's not a guarantee, but it's more likely than ever before. And then so you see the rotation, and because we could use the RSI to really help us understand this as well. You see the rotation going down. So these are good things for the market. So when this is going down, stock market is going up. So when stock market is doing well, Bitcoin is doing even better, and cryptos are doing even better. So let's do this. Let's bring this into a. All right, and so can y'all see that? So same thing. When this is coming down, we go below this 200 week. Boom. That's letting us know. All right, they're going, more a little bit risk averse or more risk on. And so here we go. This is going down at an extreme pace. Stock market is going up at an extreme pace. And then if we were to put Bitcoin, Bitcoin would be going up at even a nice faster pace in terms of price appreciation. Okay, so where are we at today? So we were big defense, right? Everything going into XLP, going into defense, and same thing. Draw your trend lines because they help you understand what's going on. Bounce off the trend line, bounce off the trend line, bounce off the trend line, broke it. And at the same time, we've also broken this 200 week. And so now, what do we see at this point when they say, hey, it's time to go back risk on? That's why we had this trend from being continual bearish, right? Because if we look at the SP 500, this wasn't broken, right? So this was the trend, bearish, rally, but still bearish. The overall trend wasn't broken until here, right? And what happened here? They said, you know what? We're going to break our trend, and now we're going to start to be more risk on coming out of the defensive sector. So what we want to see, put it in plain. We want to see this thing do this. And go low, as low as possible. In terms of market appreciation for risk on type assets, which crypto falls under that category. And what we'll see from the stock market is something like, this isn't exact, right? But we'll see this start to trend up the more that this goes down. So this is the XLP versus the SPY. So do the ratio on TradingView to see this chart. And if you don't know how to do that, just let me know and I can show you guys. Put the comment in the chat and I'll show you how to do these ratios. But typically, no one's going to talk about these ratios. A lot of people don't even know these ratios exist as far as money movement. And I'm here to enlighten us to help us understand how these markets move and how to position ourselves. And then so at the same time, what we can do is we can pull up the RSI. So we'll look at the RSI and we want to see this thing break this midline. And then so that's the key thing as well, is when we break the midline, this is a good sign. Breaking this midline. So breaking this midline and sustaining it. So we broke the midline and then we got rejected, then came lower. We want to get that round trip. So from top of the RSI to bottom of the RSI. Same thing here. Top of the RSI, max bearishness. And here's the divergence, right? Because you have a lower price. So here's the kicker, right? And so it looks the same. So with this metric, if we were going to continue to be more bearish, we'd see this metric go even higher. That's not what we've seen. So there's divergence here, but we've seen price come lower. Y'all get what I'm talking about? If that makes sense, right? And then so what that means to us is ding, ding, ding. That's letting us know something's going on. Just like how we see divergences at tops, we can see them at bottoms as well. And then so that lets us know, okay, that means the sentiment to want to continue to go to defense more than S&P 500 is subsiding through time. And then so we want to see this kind of get hit off this trend line and then come to this lower portions. And then the bull markets look like this. When we get captured below this midline of the RSI, and then primarily we spend majority of it in this lower half, that's what a bull market looks like. And then so this is hopefully what we're looking to encroach on here in a second. And so we can take this back as far as we want, right? When majority of it is spending time below the midline, then that's, a nice bull trend. And so this is what we want to see here in the future, in the years to come. And this is the rotation happening in real time. And so I know that was a lot of info. Let me see if anybody has any comments before we move on to the on-chain stuff that's going to solidify what we're talking about here with the rotation of money on the charts. Okay, so peep game. What y'all think about that? Okay, I think so. I think I did that. So I think I tried to do. I got it mixed up at first, but I tried to explain the rotation from large players going into the defensive sector, and simultaneously, when they're done doing that, they're going to go to the SP 500, so the SPY, and then we start to see the high beta tech stocks really start to outpace the SPY, and then that's how you know the rotation. Of now they have some type of profits from the because here how okay. Here's how it works. They move the money. So they make the profits in the defensive sector. Because if we were to look at the XLP chart compared to the SP 500, they made money going into defense. While most people weren't in profit last year, they were making money. So now they take those profits, they throw it back into the S&P, right? And they start to see, and then so what happens is the SP starts to go up. They make profits there, and then they start to rotate it in the stuff that's going to make them the even most profits. Then the high beta tech stocks, the risk stuff, the crypto. And then this goes up, and then they take profits on everybody at the top of the crypto cycle, at the top of the SP 500, but they take profits off the most risky stuff first. That's why crypto topped before SP 500. They take those profits first, and then everything cascades down from there, and then they start rotating back into defense. So that is the liquidity cycle of where it goes. If you've ever wondered, we talk about the net liquidity and the dollar amounts, but we got to understand, well, what did they do and where did they go? And so we can see it through these ratios. Interesting way to keep an eye on things from a macro view. Bookmarking this vid. Appreciate it. Please revert back to this video if you ever want to find out what's going on and where the money is at. And so the thing is to keep an eye out. And so in order to steward, because the way I look at it is this, in order to steward something in a good way, you have to be wary of kind of what's going on. Now, do you have to track this up every day? No. But you need to have a good idea of where are we at in markets, and that way you can kind of know, okay, well, this is how things are going to be looking. No guarantee, but this is where we're at, and then this is what the likelihood of what things will be looking like here for me in the long term. And then so keeping that long term perspective is going to help. And then so I got some good stuff to show us in terms of on chain here to wrap it up. We're coming up on an hour, so I'll spend maybe about like 15 to 20 minutes on us seeing the tide shift even on chain, and we're going to look at unrealized profit and realized profit and how we went from a whole bunch of people in unrealized profit, and then now some people are starting to realize some profits, and then these are the major shifts in markets, and explain how that works as well. So let's see, we have any other questions before we get going. But this stream is for people who are asking themselves, how do I do something better with my dollar for the long term? So in crypto, that's 3, 5, 8 years, but nothing under 3 years is really, really going to get you those type of gains. That's going to be like, all right, you know what? Like, man, this is something that's really, really like worth me, taking this profit. And I'm talking about just in general. Now, you may have some crazy altcoin that goes crazy and gives you an 8x or 10x, but how do you capture the 30x, the 40x, the 100x? You got to be in this game for years at a time. And the only way to do that is sticking through all the ebbs and flows. But with that being said, oh yeah, Nupple chart. So we'll look at that. Yeah, we'll look at that. Yes, sir. And so with that being said, this is for people who are looking for a way out of the rat. Let me pronounce this the correct way. The rat race, where you feel like you're working hours and hours and hours, but things are getting harder and harder and harder. Essentially, you got to work 5 more hours to afford the same type of lifestyle that you did 2 years ago. And so, you have to look at your options, which crypto is one of those options. So let's see. Swerve, since you are on the post train as well, testnet V3 going live soon. FYI, I hope so, man. I've been looking at that and seeing where they're at, and Richard's been giving all these updates as far as the code, as far as what's going on, and those are exciting. Most people don't understand it, but at the same time, this is letting us know that process is being done, and so I'm looking forward to it. And get best believe I'm in this thing for the long haul. Like, it's probably going to be some opportunity to take some profits, and depending on where you're at, that's your strategy. I'm not going to get into all that, but I just know where the bulk of what I did for the sacrifice, the bulk of that ain't going to be touched for quite some time, because I know where things are going to be for a major layer one years down the line, especially at the top of a bull market, not at the bottom. And so, cool. Good hack to make a dollar go farther is to listen to stuff like this while getting paid at your daily job. And that's the key thing, because we want to talk about, all right, so you actually made me think of a thing. I like to call it a three-legged chair, right? So for example, three-legged chair. Why would you not want to sit on something that only has one leg? One, it'd probably be very uncomfortable, but you want stability. So having different, like, three legs, so three different branches, that provides stability. And then so one is earned income. This is where majority of people only have one leg. So guess what? It's gonna fall over. There's not gonna be stability, and you can't take a breather. You have to always have this thing standing up at all times, or you're gonna be in a world of pain. This is where 99% of people are at. You need to add to that by also getting some income through trading that dollar for something and investing it. That helps you grow through time as your wages hopefully grow through time as well. And then here, right? Having some type of savings. That's also a great thing. So people focus here, but they forget that investment leg. And you can do that through real estate. You can do that through crypto. I like to have different legs to my investment arm as well. And then and I'll even add a fourth one: owning a business, right? Owning a business outside of someone having to pay you. Owning a business is another leg that I'd put on there. So, um, you know, and I'd add a fifth one: protection. So, do you have insurance? And just in terms of like, hey, when something happens to you, is your family going to be okay? So, term insurance, cheap. It normally gets the job done. Not financial advice, not insurance advice, but just talking about different legs of the stool that you need to just have a nice foundation for the long haul, right? And so just some thoughts. So that part that has no that has no bias to talk about what prices are going to do. That's just my personal view on life in terms of how to handle certain things in regards to finance and going to attain said finance. Are you only relying on one way of doing it, or can you branch out to several ways of doing it? And typically, when you spread out your seed, I mean, because it says in the Bible. Matter of fact, I might have to hit y'all with a verse, because I was reading this the other day. Let me find it. It's in Ecclesiastes. Let me see here. Let's see. You know me, man. I'm gonna have to take it to some principles here, because I like living life not off of opinion or what's going on the short term, but just principles that sustain themselves through time. And so let's see. All right. Here's something. So Ecclesiastes chapter 11. So this is verse 1. So it says, send your grain across the sea, and in time profits will flow back to you. So this is in the Bible, y'all. It's very interesting. And so, but divide your investment among many places. So maybe in crypto, don't just buy one crypto, buy a few different ones. For you do not know the risk that might lie ahead. And so that's like bull market, bear market. You don't know what's going to happen tomorrow, right? So you want to be diverse in whatever you are putting your money in. So being diverse inherently means not only being in the dollar either, because that's not diverse. You've got to trade the dollar for maybe a home or maybe an asset like crypto. Trading that dollar is very risky, but people just don't realize it because they just see the physical version of it, but they don't see the purchasing power of it going down every single year. Verse 4, when clouds are heavy, the rain comes down. Obviously, bear markets. But like when you think about it, if you plant a seed, right, the only way for it to grow, you got to have some rain and sunshine after that, right? And so when clouds are heavy, the rain comes down. Whether a tree falls north or south, it stays where it falls. Okay. And then so here's the key. So farmers who wait for perfect weather never plant, and then if they watch every cloud, they never harvest. So this is all about ebbs and flows here. You got to be able to plant a seed, and at some point you got to harvest it. But you're going to experience rain, you're going to experience sunshine, you're going to experience, some uncertainty. But understanding the process, it's a biblical thing, and this is a life thing. Like you can see not just in the Bible, but you can see a lot of things out in the world. This is how it works. You want to go be good at something, right? You got to plant those seeds. For example, I was an athlete for a long time. Personal antidote, personal experience. For me to make it all the way to the NFL, what did I have to do? Do the things that most people did not want to do. I had to plant those seeds and work hard. Wake up early, go work out, go run, go learn more about how to run a route better or how to do this better. Stayed on it continuously. I didn't choose just one day and be like, oh, that's it, I'm gonna make it. Life don't work like that. You got to do something consistently for long periods of times, but also at the right times. So how do you know it's the right time? So for example, how do I know that I'm going to have a good amount of growth in my playing ability? Is just when I'm extremely tired, I don't want to do it, and no one else is doing it. That's how you know. That's the pivotal points, and you still take the action at that point. Those are the seeds that get deposited, and then those are the seeds that help you grow immensely. So that's what these lower portions of the bear market are. No one wants to go through it. No one wants to take action during those times. But if you take the action, you're going to get the most growth out of everybody on a long-term time scale, and being consistent, not just taking one day during the like the bottom basin of pricing or when things are on severe discount, but doing it through this week or this month, right? Sowing the seed continuously. This is this is how it goes, man. And so I know I went on a preaching tangent, but I just really feel that this stuff is important to understand because this ain't just me talking. This is principle that is conversely not just here in crypto, but through everything in life. If we take the time to realize it, God has something for everybody if you are willing to follow the process, right? And so nothing happens by accident. Let me see. Preach. Hey, look, sometimes I got to jump in that bag. What team did I play for? So I played for a few teams. I played for the Texans for a few years, played for the Jaguars. I also played for the Packers and also played for the Ravens briefly. So with that being said, on that journey, I got a chance to understand finance at a different level, seeing what people with large amounts of capital, what were they doing? And I started to learn that they don't play by the same rules that everyday people, like you and me, like how, typically people play it, which they just go to work. Mm-mm. You take that earned income, you got to do something with it, or else that's all you ever do your entire life is just work. And that's perfectly fine if you enjoy working. I love to work. I think that kind of gives us our purpose. Like when we go to do what we're good at or what we're called to do, then we can branch out and meet other people, get to know people, share experience. This is what life is all about. But at the same time, are you working yourself to the bone, and at the same time got nothing to show for it? And it's just like, dang, if I were to stop working, my quality of life would just go down the drain. That's a tough spot to be in. So the thing is, you got to learn of what has worked for not just the last 5 years or 10 years, but for the lifelong of time. You've got to be able to plant some seeds. And so whether that's making your craft at whatever you're doing better by planning the hours of saying, hey, I need to get better at my job or my business or whatever it is. So what are you doing to ensure that happens? There's nothing good that happens from no action, right? So you got to have the faith to believe that something good can happen, and then go act on it, and then just go through the journey. And then what you'll find is, don't worry about the outcome. Don't worry about all the money that you're going to make. Don't worry about, oh, my business is going to do this. Don't worry about, I'm going to have this job position. Just go through the process and then see where you end up. And then what you'll find is, when you stay consistent, not just for a week or a month, but for the years, you'll find yourself in a good spot. And that's just what it takes. Real talk, from a person that's done it, from a person that I've seen plenty of people do it. And so the thing that, when people are trying to elevate and try to up their game, that's the component that they're missing. And so, yes, is it hard? Yes. But at the same time, it's also hard not having choice when it comes to finance. It's also hard when, it's uncomfortable when you have to worry about paying your bills every single week, every single month. That's hard too. So choose your hard. Which hard you going to take? I'm going to choose the hard that's going to be prosperous for myself and my family and people in my close circle of influence, because I'd rather take the sacrifice now for this period of time to enjoy the longer portion of my life. Granted, hopefully, God willing, that I'm healthy and all that kind of stuff. So I had to go on a little tangent real quick and talk about that. What's up, Swerve? Can you tell the story of how you transitioned from pro football to the financial space and solidified your life from an economic standpoint? I can. So as I was playing, I knew this was because I came from not much and very humble beginnings, which I'm always going to remember and still live my life on those same standards of just being humble with what God has given me. Now, with that being said, I had to go through my journey of learning how to steward, but also what to do, because like I said, I did start to learn. Yes, I may have a good job that pays pretty well, but just having this money just sit there, idle money gets spent, and idle money tends to evaporate. That's one thing I realized. So what I did was I started, looking at real estate, doing some things within that realm, learning about how to grow net worth, right? Into different things, did stocks as well. And then I started to realize, okay, now I could have some income, but not necessarily like, hey, me taking dividends off the income all the time, but I could still grow my financial situation alongside while I worked. And then once you have that starting to take off for you through the years and that go pretty well for you, you start to realize, okay, well, and I encourage people to say, hey, continue to work, continue to do things you're passionate about. For me, I just knew that a professional ball, it was just a time period that I was supposed to spend there as I transitioned into something else that God was calling me to do. And then so I'm, embarking on that now, and things are, looking pretty good there. And so economically, it's just continue to work extremely hard with your earned income. And as much as as you can comfortably sacrifice, start to invest in different vehicles. And what you'll find is, as you do that through years, you'll start to be able to breathe a little bit easier. And, that's just kind of how things go. Let's see. Did you keep up the consistency through times where you did not see the results? That's a great question, because, to be honest, that's where you have to be the most consistent. When you don't see it, you're not seeing it physically, right? But I promise you, when you stick through those time periods, that's when you have the most gain in the future, by you staying 10 toes down, right? You got to look to the left, look to the right. A lot of times you're not going to see nobody there. You're not, especially on the path that you're going on. But you still have to have the gumption. You still have to have the motivation to say, you know what? Even if I can't see it right now, I know God has something positive for me in the future. So I'm not going to hold my faith on something that I could see. I'm going to put it on something that I just know as a core fundamental and foundation for myself. And so when I did that, all those times where I did that, didn't worry about how things looked in the external, and I just focused on the process of keep nailing it away, keep chipping away at what I was supposed to be doing, the outcome that I was looking for maybe didn't happen to the exact same extent. Sometimes it's even greater than anything I could have even imagined, but it was always somewhat of a positive outcome. Either I learned something, or it was something that was like, okay, I'm in a better spot. But you're looking at in pure like investment terms or in financial terms, this is how the process works. You're not going to see the results right away, and this is why people don't like investing, because they want to see something next week or next month, and they want to always be good. It's never going to always be good, but if you give yourself enough time, it's going to be okay. And typically, more often than not, it's going to be a better situation than where you are today. And so that's that's how I've always approached it, and it's gotten me a lot of good results for a very very long time. So all right, y'all. So I do have some more stuff. I mean, if we want to keep on this wavelength, we can. But I got to show y'all this on-chain stuff real quick, and then we'll wrap it up. So cool. I know sometimes I may lose some people when I kind of go into preacher mode, but sometimes these are the things that we need to conceptualize how things are going. All right, but real quick. So let's look at this. Conceptualize this right here. Purchasing power of the US dollar. Down, 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 down. Basically saying your dollar buys you less stuff. This is going to 2020, right? What $1 gets you, you could have got 30 chocolate bars back in 1913. So about 100 years ago, 110 years ago. Imagine trying to buy 30 chocolate bars now at $1.50 a piece. You're spending 45 bucks. So what does that tell you? The dollar that you have now, it looks the same, but you can't get the same amount of stuff. Y'all getting this, right? Go back here, 20 Coca-Cola bottles, right? All we can do and all we need to understand here is just look at the chart. This is why charts are incredible for our understanding, because it lets us know what happens through time. It's continual down, down, down. And when you continue to make lower lows like this, you do not go back up. Why? Because they keep making more debt, putting more debt into the system. That's not going to stop. Once you go on that journey, you can't stop it. Here's another view of the same thing, right? Coming down, purchasing power of the dollar. Ain't nothing. So why are we saving this? You need to trade this for charts that look like this, right? Trade this, and look, it's been here for a long time. Sustainability. Trade this for stuff that looks like this, right? Trade the dollar for stuff that's USD, because this is continuing, this denominator is continuing to go down. So quick math, anything in the numerator in this denominator, as long as it has sustainability through time, will go up. It's that simple, guys. And the longer that you stick around, so not just for a year or a year and a half or two, stick around for 3, 5, 10 years. So this is just since 2017, right? Let's say you didn't get the exact bottom. Somewhere here, you figured it out. Just like right here, you could figure it out. These people are still in profit, up 6,000%, 6,111%. That's 61 times their money. Since 2017, 5 years. Is 5 years a long time to you? You decide. You decide. But all right. So let's go to on-chain real quick and see if we could wrap it up with some of these topics. We're talking realized profit and unrealized profit, and how these rotations can tell us a story. So this is an in close look at the last 3 months of Bitcoin being very low volatility to boom, influx of capital. So right here, about $100 million from institutions start to come into the market. Yay, everyone's happy. Then we consolidate for some time before the next move. Okay, so a return to profitability. And so the biggest thing that we want to look at is this is a 7-day EMA of the realized profit. So what do we say? This is when people are taking profit. So we see these at we see these at interesting moments. Here at the top of this previous bull market, we've seen most of the institutional players and large money start to take the most of that profit right there at this first peak. And now that was only at 40K. But then you see high amount of profit being taken early on right here in 2021. This lets us know, hey, if we see charts or a chart like this in the future, so we come back to this chart and we see this metric start to have these high peaks like how we see here, here, right? That's clearly different than when there's not that much money in the market, right? Clearly different. It's a high amount of profit taking. That means they're in profit, so they can realize that profit. And then so what do you see typically? You see a downtrend. So look at this macro downtrend of not too many people realizing those profits, downtrend. And then we get this low volatility, and we have that first breakout here of being able to take some profits, which hence means that people are not as underwater, which is a good inflection point to say, okay, now we are turning tides into something else. And then so this is the inverse. This is the realized loss. So same thing. We'll see a large amount of realized loss after these capitulations. So we have the Luna incident, we have the Celsius capitulation, and we have the FTX capitulation. And then so the key thing is here is the later stages. These are, and this was an investable bottom here, a basin portion after this capitulation time period. And then so the losses realized by the market over the same time frame started to expand after January 2021, reaching an initial peak in May of 2021 sell-off, right? And then so the biggest thing is here, right? You have this sell-off, and then this is how you know, oh, snap. So low volatility, low realized losses, that means everybody's in profit. Uh-oh, game over. This first start of we start to see, all right, now people are in loss because people are taking profit at this time, and you see this metric starts to really get kicked up. And then when you really see this, you should just know, all right, bull market's over here. The technical bull market is over here. You see these higher spikes of people having realized losses because they just don't understand what's going on. So this is okay, so you know how we talked about ratios. This is a ratio in between the realized profit and the realized loss. This is a key one, and we'll spend some time here. So if you were to take a look, understanding that we can identify macro lows and not saying a bottom price, but just overall basin. And what does that translate to? A lot of realized losses during that time. And so what does that show us here on this ratio is you see a lot of people taking loss, right? And then at some point we go back positive. One thing that I want to really pinpoint is that time period. So we spent some time period at a very amount, like a high amount of realized losses. So you can see this lower period here, and you can see how we were comparable at this bear market compared to last bear market here. Okay. Now the key thing is now when you have you remember that net line that we were talking about for the MACD, you also have that net line of 1 or 0 per se of when you go above it. So now you start to go into a more type of bullish sentiment. And so you see how this is a bearish sentiment, and because you have a lot of net losses. Now you have this period of where you finally go above this net zero line, and now you go positive. And then so now you have net positive profit. And so these typically are the portions in the beginnings, right, of positive price action in the mid to long term, but especially at the bear markets, because here you go. The price here in black, you don't come back down here. You have an uptrend, you come back down, but you don't get back down to these lows because the order flow, the coins got spent down here. So spent at a loss. But guess what? On every side of a trade is a buyer. So that means they got accumulated and bought people who understood what's going on by hodlers. And then now those hodlers hold it, and that's why we have support. And then we can go up. And then so same thing here. We finally had that moment of us being negative, a lot of negative losses. So negative losses, realized losses here. These aren't unrealized, these are realized losses. So you can see Bitcoin price going down, people taking those losses, taking loss. You don't want to be these people selling at a loss ever. Taking loss. You just hold, right? if you bought up here, it's all good. Just hold, but take action. When we have a big amount of realized losses. So you can see realized losses was at a very deep comparable point as here in the previous bear market. This is what let me know, okay, this is it right here, right? And all this stuff, good stuff down here, right? Where we've been for the past, few months. But we finally had that point to where we've now got back above this line, this midline, and now we're going back positive. And so this is a good sign as a tide shift. Okay, so that's what we're talking about. The tides are shifting. And so this is going to let us know sell side risk ratio. So to put this in layman's terms, this is a good barometer of helping us volatility in the market. And so how do we conceptualize and understand this here? So we have this here, this ratio. And what does it tell us? When we go in a very low volatile time period, so we get below this red line. And so here's the key thing. We go below this red line. This is letting us know low volatility. And then so these portions like here, low volatility, that means a low risk premium as well for the near term. So even here, low volatility, higher price, right? Low volatility, higher price in the future. Low volatility, right? Low volatility, higher price. And then so when we see this metric go up high, these are the high volatility moments. So this is FTX, higher volatility here, higher volatility here. So after these capitulations, it's letting us know when we go into these sideways choppy actions where things are boring, really consider, okay, but where are we at in the global macro as far as like the money movement? And does it make sense for me to allocate towards an asset? And so here we go. So the unrealized profit. So this is like a NUPL, but being able to look at it in a different way. And we can pull up the NUPL as well. So when the red is in more like volume, so I guess you can say we see more red than there is green here. This lets us know a couple things. So we see more red than green. That means more people are at an unrealized loss than in profit. So we can see that here. We can see more red than green here. And then so this is letting us know the shifts, right? And then so when we see this red start to subside, this lets us know, okay, now more people can start to begin to be in profit. Because this is the NUPL chart here with the blue line here. So this is giving us the volume behind what the NUPL chart explains to us, okay? And then so when we see that this NUPL, so this blue line goes positive, price follows. And so we'll look at that here in a second. And then so what do we find ourselves in? We are no longer in this red portion of the NUPL, right? This blue line goes across that midline. Boom, here. Goes across this midline and sustains it here and here. And what do we just have? We go across this midline here. And then now we start to see this downtrend of people net unrealized profit start to now tick back up, which that's the first sign of the tide changing. Not saying that we're in a full-on bear or bull market, but the tide is changing from a large bear market. Okay, so this is good stuff here, guys. As we continue to understand how these markets are moving for us. So another thing here. So unrealized profitability momentum. So let me see if I can explain this one in layman's terms as well. So essentially, because a lot of this stuff is just, I mean, they're doing some advanced calculations for this stuff, but we can get it in chart form. So when we have momentum, because this is all about momentum here, right? How do we check it and see if momentum is in our favor? Well, a couple things. One, if we are looking at this metric and we see it gets to this low comparable, because what I like to do is just find previous bear markets and say, hey, are we at a comparable time with that metric that I'm looking at in terms to bear markets. Now, when prices go higher, then we're going to need to start looking at these peaks here for these metrics. But comparable, if we look at it here with the relative unrealized profit momentum low here, we got a low portion here, and we're at a comparable time here. And now we start to break back up. And so this is interesting because, as we read here, confirmed breakouts above the equilibrium points have historically coincided with a transition into macro market structure. We also note that the length of time elapsed below this equilibrium point has been similar across major bear markets. So, major bear markets below this red line, this midpoint. Once you go back above the midpoint, great things happen typically. You see bull market here, a lot of people with their momentum and profitability. Same thing here. We go below this red line, bear market starts. Boom, back above, good territory. Same thing here. We come back below it. Okay, cool. Another chance with COVID. Go back above this midpoint, bear market kicks itself up. Same thing here. Bear market started all the way for sure back here when we went below this metric. See price? And then that's how you know this one didn't have legs, because we didn't go as high as where we were previously. That lets us know most of the money got flushed out. Profits got realized at this point here. Bear market. So we've really been in a technical bear market since May of 2021, right? There were still some plays to make some short-term money here, but overall, and where we find this bottom basin portion with the metric, and then now we also see that we're going above this midline here in red, which is typically a good sign to see. And so so this is the reserve risk. I mean, we talk about this a lot. The risk is low. It's a good sign. And then, you see higher risk. So this is kind of going to help us. So if we get a situation like we seen in 2019, you'll start to see this metric start to go up at a rampant pace. And that means we'll have to digest a little bit longer, like how we had in like the back end of 2019. I know a lot of people are trying to play out that scenario, and we'll see if that's the case. Okay. But just in general, when you have the low portion of the risk metric, it doesn't matter if we come back down, you're still at a lower price point. That means you're in profit. That means you're a happy person. And then just wait for the bull market to kick up thoroughly, which happens, the year after. Okay, let's see here. All right. And this is the last one that we'll look at, and then we'll wrap it up. We've had a long stream, a lot of information to digest. Come back to it if you need to. So, right here. So this is the realized HODL ratio. So we got to understand the difference between a long-term holder and a short-term holder. A short-term holder is what they classify on chain are people that are holding that coin. So in this instant, holding that Bitcoin from anywhere from 1 month to 3 months. So these are, the typical person when they come into crypto. They're thinking short term, right? And then long term is someone holding for at least 6 months to 2 years. What they find is there's different actions taken by people who are long term holders versus short term holders. And then so this is going to explain to us the wealth transferring, the coins going from short-term holders to long-term holders, and what happens when that instance is kind of going on. So what do we see? We see the wealth transferring to short-term holders. Guess what? The bags are caught. So long-term holders, basically, how do we want to, because we can look at the color, but then we can look at the actual ratio. So basically, when we see this ratio going up, that means short-term holders are capturing and buying more Bitcoin than the long-term holders. When we see this ratio going down, that means long-term holders are buying more and they're holding more Bitcoin. Hence means since their routine of what they do is different, because they don't sell, the long-term holders, more than the short-term holders, right? They're more likely to hold. So what does that mean to us? Since they're holding, that gives us support to go up higher. So when we see this coming down, guess what? Boom, that rotation of price going higher is in line. And then when short-term holders, so when they start to sell and then the money goes into short-term holders' hands, guess what? Coincides with bear market. See this metric top out, come down, that means bull market in front of us, right? And so we kind of go where we are today. The short-term holders been kind of dominating here. And then as they sell and the coins go into long-term holders' hands, and then now we see the long-term holders just holding, we see this metric come down. What do we see? Price start to get a basin and start its journey. So with that being said, we're in the beginning phases, right? Because as you can see, you can come down considerably, right? Before you really go too much. But the biggest thing is we want to find ourselves down here at this rounded portion, right? Rounded portion under 1. So we're going to come back to this chart maybe 3 months from now, 6 months from now, a year from now, and keep checking those boxes. And this is when we say, not financial advice, not opinion, but in previous time, the data shows us that these are the more advantageous times to start taking profit. This is when you start to get below 1 because you would have invested here at these higher portions. You come below 1, and now when you start to see this thing curling over, so letting you know sentiment is changing, all that stuff. This is another way to quantify it or qualify it, I'm sorry, to verify that tides are shifting to the downside. Probably want to be doing some DCAing out of the market, capturing all those 50Xs, 100Xs, 20Xs, 10Xs, all that good stuff by you sowing the seeds right here, right here, right here. So see this metric up high, up high, up high, and we still have an opportunity because we still haven't gotten too far apart in time, right? With this metric here. And so as the years go by, this is what's going on, y'all. So that's a rotation of coins going from short-term holders to long-term holders. So we talked about money flow, rotation, conceptualizing all of it. I'm hoping this was helpful. I'm hoping it was impactful for you guys. And we tread forward and we keep going, right? Pull the muscles out, flex on them, do what you got to do, and we continue on. So I appreciate y'all for coming through. A lot of information, a lot of information. So I know it may take a little second to digest it. Let's see. Let's see. Cool. Thanks for sharing your story. Yeah, because I mean, I want you guys to know a little bit more about me. I just don't want to just be on a guy on the internet just saying stuff. It's good to have a little bit of background without me doxing myself or my life too much to kind of know what the deal is, right? What do you see the DXY doing in the short to medium term? Probably consolidate. So now I will give a couple opinions because the stream is pretty much done. The informational part, the education part is done. It's stuff that I had to educate myself on. I present to you guys. That's done. Now I start to give a couple of opinions, and then we'll wrap it up. DXY. If I were to call it, hold on, let me go and check it out. See, because we had it started to pull back up. Let me pull it up 1 second before I answer. I think we're at like 102, 103 now. Yeah, it's probably gonna. Do I want to show the chart? Nah, we're just gonna have to get into that another day, man. Uh, I will say we'll consolidate here between 105 and 100 for some time before we start to push lower in the months to come. That's kind of what this is showing me. Okay. Bro got a piece of delivery place as a bookmark. That's what's up. What tier Glassnode sub do I need to see the charts you're looking at? Need tier, at least tier 2. Tier 3, you gotta pay some money for that. But if you pay for tier 3, you get to see everything, which, everything I was showing you. So with that being said, at least try to go for tier 2 so you can get a good amount of that information. A lot of alpha. Yeah, that's what I try to do, man. I try to give you guys the tools that way you can see things correctly. Um, stop stop listening to people on Twitter and the news, man. They will get you wrecked. Stop listening to people on short term timescales. And at the end of the day, I'm not trying to sell you guys nothing. I think that's the biggest kicker. I'm not trying to sell you guys anything, nothing, right? Not trying to sell you guys anything. Just trying to help us understand how things go and how things move. And that's pretty much it. So with that being said, that's it for the day. I changed my camera settings, so it's a little darker mood. But I'm kind of trying to do some little things there, see how that looks. But yeah, that's it for the day, y'all. So thank y'all for coming through. Hoping that y'all have a God bless rest of your week. And until next time, I'll catch you. Peace.